Good evening, everyone. Can I please have a quick sound check? Let me know if you guys can hear me, if you guys can see the screen. I would really appreciate it. This session tonight is being recorded, and recording will be sent out to you guys after the presentation. Okay. Yeah, Gerald, we just kicked all these AIs out of here. So yeah, we're having some issues with them as well. So yeah, you could do that as well. Okay, everybody. So welcome. Where's everybody at tonight? Where you guys are from? I'm in beautiful Boca Raton, Florida. And the weather is just absolutely fantastic. 78 degrees right now. It was a gorgeous day. Hey, Dennis. Hello. All right. So a lot of Floridians here. Hey, James. Orlando. Beautiful. All right. Okay. So tonight is going to be special because we're going to dedicate a lot of time to charts. And this is my favorite topic. My favorite thing to do is to analyze charts and to try to identify trades, right? And hold on just 1 second. All right, at 83 degrees in Arizona. Awesome. All right, team, let's get started because we have a jam-packed session tonight. All right, so tonight is going to be the Power Hour Income Blueprint. This is something that I have been specialized in for decades. For those of you that do not know, I have started on the institutional side and decided to day trade and take life into my own hands, basically generate income on my own. I saw the possibility. I was there, and I was on the institutional side. Obviously, I was trading long term, right? So everybody was not only generational wealth, but also a lot of investing. So a lot of investing, different investing tactics. So I just want to welcome everybody. We still have people that are coming in. We had some of the attendees that had issues jumping in. So that's the reason why I kind of like delayed for 2 minutes my entry into the room. But I just want to welcome everybody, and I just want to say good evening. I'm really glad and very happy that we're all here tonight because what we're about to talk about today is something that a lot of traders completely misunderstand about the market. Most people believe that if you want to make money trading, you have to sit in front of the computer all day long, watching every single tick, chasing every single move, and jumping in and out of trades all the time. Little do they know that every single time when you place a trade, you basically open the door to risk. So the more you trade, the more you risk. So that's not how professional traders operate. In reality, some of the absolute best opportunities in the market happen during a very specific window of time, when liquidity is high and when institutions are active and when the market is actually moving with purpose. And one of the most powerful windows of the entire trading day is the power hour. We're going to talk about the power hour today. And we're also going to talk about the power hour reaction into earnings season, because we have just started earnings season last week. And last week I gave a presentation about earnings season and how you can maximize your gains within the power hour using earnings season. So that's where literally momentum is showing up, volume, follow through, the possibility of follow through. That's where institutions are positioning, core positioning. Because if you are a day trader and if you're wondering how is the market moving, are day traders moving the market? And the answer is no. Investors are moving the market, and especially in the power hour. And that's where disciplined traders can generate income, often in less than 1 hour of focused trading. No browsing, no phone, no answering the doorbell, just focusing on trading. Get into your Zen mode. So tonight I'm going to show you my framework, what goes behind the Power Hour Income Blueprint. And we will be talking about, you got some of the elements here, but we're going to be talking about how I generate my income in less than an hour per day, and my traders do the same thing. And we teach traders how to take advantage of the market within this power hour, how the same setups can produce day trades and also swing trades, because when you day trade, you are watching the cues, you're watching the spies. Futures traders like myself, I primarily started in stock trading, and I'm still a passionate stock trader. I am on the swing trading side and the investing side. I don't day trade as often stocks for tax purposes, but I am a very active futures day trader, and that is for tax purposes. And this happened about, I would say, 12 to 13 years ago. That is when I made the switcheroo to day trading futures instead of day trading stocks. I didn't like it at first, but then I'm like, yeah, show me the money, less taxes, and simplified reporting. We're also going to talk about what most traders misunderstand about earnings and volatility. And we're actually going to start with this. We're going to talk about April, because April is a very important seasonal month, and it proved that way. I have proof to the pudding. So I'm going to show you some charts, some seasonality charts, because you see, when we talk about trading, trading is not that, you enter here, you exit here. It's complex. And once you understand the complexity and simplify it, then you're good to go. And it's going to be very hard. It's indeed very hard to be down, to lose money in trading. It's really hard once you know what you need to do. And once you learn the rules, the setups, the system, everything is super organized in day trading, more so than in swing trading or in investing. But before we actually dive into charts, because I promised you guys that we're going to start with charts, there's one thing I want to make very clear. Number one, the market is not random. The market is reacting on specific levels, and they're not hard to gauge. I will show you in a few moments. Institutions are positioning, and we can predetermine how these institutions are positioning. And there are some secrets about volatility that you guys are not taught, or you guys were not taught. Unless you were on the institutional side, you do not know what moves the market in certain cases, and how the slingshots occur, and why they occur, and how they occur. Definitely liquidity is shifting, and you have to keep your eyes on liquidity, because in a dry market, in a market that lacks buyers or sellers, the price is not going to have follow through. So you need to know how to read that on chart before you take a trade. Because if you take a trade, you open the door to risk. And if you do not have the proper liquidity into the market, that trade is not a high odds trade. It's a low odds trade. And money's flowing from somewhere. And you just have to identify where the money is flowing into, because of the sector rotations. Is it moving into tech? Is it moving into industrials? Is it moving into financials? So you got to keep an eye on the market in general. And in one of the invitations that I sent out, I said something very important. I don't know if you guys are going to remember right now, but you have a first row seat at swing trading, whether it is in the futures market, depending on the risk appetite, or the stock market. Because when I day trade, I watch the sectors, and not only that, but I watch specific stocks, and I watch the dominant stocks within each sector. Like, obviously, I watch the Max 7, and not only that, I watch about 30 charts that are on my screen constantly that are part of NASDAQ. And I have another 30 stocks that are leaders within the S&P and the Dow. So I know firsthand that if there's going to be a rotation, I don't need CNBC to tell me that there's probably a rotation, because when they're telling and when they're mentioning the rotation, the move has already occurred. And I don't know about you guys, but I want to be the first one that gets in at the same time with institutions. So I also want to mention something before we actually dive in. It's a little bit longer presentation, but I had to get this out. Our job as traders is not to fight the market, not to fight the market. I see a lot of contrarians, a lot of traders that go like, oh my God, I'm going to short. And they feel so smart. In the reality, they're so stupid, because it's like being an ant in front of a freight train. You have no control, and you're going to get squished. Our job as traders is to read the tape and align ourselves with the tape, with the momentum. Don't you guys want to have follow through and make, for example, if you're getting in NASDAQ to make 120 points versus 3 points or 5 points or 10 points, and you call yourself happy that you cheated on the market and you caught a little bit of a pullback there, one red bar, and woo, you're the king, okay? Because the truth is that you, with one contract or 10 micros or 50 micros, or let's say 3 contracts or shares, you're not going to move the market. You're dead meat. But if you understand how the market really works and actually works, you can position yourself alongside the money that does. So that's exactly what we're going to be breaking down tonight. So I know it's a lot to discuss, but we're going to put this into practice. So everything that I've talked to you guys about right now in this little introduction, that actually could be a little lecture, I'm going to show you on charts, and we're going to dive in. Like I said, we're going to start with seasonality, and then we're going to dive in into the mini S&P. It represents the broader market. And we're also going to analyze we'll analyze NASDAQ as well. And this is exactly, like I said, what we're going to be breaking down tonight. So grab a notebook, eliminate distractions, and let's start by taking a look at what the market is really doing right now and where the opportunities are forming, and whether long or short. Does that sound fair, team? Give me a 1 in the chat box so I know we're all on board. All right. Thank you. Thank you, Dennis. All right. Okay. All right, team. So let's get started. Before actually we start, I know many of you guys, I don't recognize a lot of the names that are in here, but all right, here we go. All right. Okay, cool. All right. So for those of you that are new to Trade Out Loud, my name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest in the markets. I have been doing this professionally for over 25 years. And prior to my 25 years of professional trading and investing, I come with 10 plus years in investment banking. So I have been on the other side. That's the reason why I am drawing attention to how you need to respect the market in general and the whales, the big whales that are coming in, the big sharks that are into the market. So we don't get squished. Okay, so TradeOutLoud has been around since 2010. We have programs that have been running strong ever since. One of the most popular programs is the Stock Swing Trader, which has been around literally since 2010. And I also run a trading room. I have been, like I said, I shifted in 2015 to trading futures for tax purposes. And I wasn't very excited at first, but then I absolutely loved it. And since then, I devoted my time to perfecting a system that is a blend between futures and the stock market knowledge to give it a spin on the futures side. Because if you just listen to a regular futures trader, like in Chicago, I know quite a few that were floor traders in Chicago, and trust me, they're really bad traders, really bad traders. Some of the most successful traders have the stock trading background, and they incorporate that because as futures traders in general have blinders, and they don't really look at the stock market in general. They just look at one system, and that's pretty much it. Okay, so we're here to discuss all aspects, and I'm going to show you exactly how I look at the market, especially now that we have kickstarted earnings season. I also specialize in high velocity trade. So a high velocity trade is a trade that it's a high trade first and foremost that generates more income, that generates more profit. In terms of R, probably you're getting 2, 3, 4 R's for every risk unit. All right, so let's get started, everybody. And we're going to take a look at the first chart tonight, which is the seasonality chart of the S&P 500. Okay, so seasonality is basically a trend into the market. Is it a market tendency? Better put, is a market tendency. Okay, so bottom line is that this tendency in the market is a lot of times in sync exactly with the market momentum. So this is historical data. In this chart right here, we have 20 years of historical data and how the market has performed from January into December. Okay. So again, like everybody else, like everything else, it's a forecast, for example. It's just like the weather forecast. They were telling you it's going to rain at 4 o'clock. You have, let's say, 30% chances of rain at 4 o'clock. But the reality is that the sun is still shining and you have no rain, but you have that chance, right? So in many ways, this seasonality in stocks and indices and what have you is the market's tendency to react within a specific month or within a specific period. And as you could see here, this is April, right? So this is beginning of April, this is end of April. So as you could see historically, for the last 20 years, the market has been higher in April. Okay, has been sideways, pretty sideways, and pull back in May. Remember the adage, sell in May and go away. Okay, well, that's not necessarily the case, because if you have a strong April, you may continue in May, because guess what? Now you have a lot of algorithms that are trading, and the market the market, I think about the last number that I read was something like 88% of the market volume is algorithmic trading. So therefore, if algos are trading, they don't need to take vacation. So sell in May and go away it's not really applicable in today's market in 2026. But anyways, May has the possibility of decreasing volume. And I'm going to tell you exactly why in May we are going down in volume, especially end of May, because we're basically having the majority of companies that report, they're done, right? So the majority of companies that are due to report earnings, they're basically almost done. The most important ones are almost done by the end of May, and June becomes typically super flat, right? So we're going downhill from about middle of May towards June, towards the end of June. And that is because it is within earnings season. So when you think about earnings season, imagine that you have like this circle, right? You have this circle. This is earnings season. And earnings season is divided by two, okay? You have the first half and you have the second half. The first half is basically April and half of May, okay? This is it. And then you have the other one, which is half of May and June. This is very active, super active, because you have all the big companies that are reporting. And I'm going to show you a graph to show you exactly the intensity that earnings season has within these specific months in weeks. So the first half of earnings season, so the first 6 weeks are incredibly active. You have Netflix. In fact, Netflix reported earnings today. You have financials. You have Microsoft, Google. You have the big Mac 7. And not only that, but you have companies that when they report, they move the markets, right? Apple, for example, or I don't know. I'm trying to think of something outside of Mac 7, but I can't quite put my finger on, but you get the picture. And then you have the last 6 weeks, in which the last 2 weeks, you have total chop, okay? You have total chop. What does that mean, total chop? Well, you have two elements that are happening. First of all, is the quadruple witch option expiration. And then you have the window dressing, and you have one more actually. So there are 3 here. You have the end of the quarter, and you have a lot of balancing, okay? You have a lot of balancing. So the second half of the quarter is more focused towards news, okay? Towards news. You're going to find out that in the first half of the quarter, the economic calendar is not as rich because you're getting more fundamental impact. Do you guys follow? Does it make sense? Is this something that, you know, you're finding interesting about the market? Let me know in the comment box, because I want to see the pulse. Because if not, I could fast forward and I could just move on to some slides. Okay. All right. So I don't think that anybody quite explains what happens during earnings season. Okay. But this is actually what happens during earnings season. Now, when you push the pedal to the metal, it has to be here in the first half of earnings season. That is when you have follow through. You have that beautiful trend continuation. You have the volatility, and I mean the good volatility from the impact of volume in the market, because you're getting investors to start putting their money into the market, into different stocks, right? And these different stocks are going to move the indices, and therefore the futures market is going to move as well. And then in the latter half right here, you're getting, like I said, lots of impact from the news. You're getting a lot of shake and bake, right? So you're getting a lot of chop. Does that make sense? And this is for this earning season right here that we have just begun. And this is a game plan from April all the way to June. Okay, so now you know that first 6 weeks is where you're going to be extra focused on making money, because the latter half is not going to be as active. Okay, usually it's not. And you're going to have trades that are not going to have follow through. You may want to apply, for example, less risk in trades. Maybe you're going to use half the size, or maybe you're going to go half the size, double the stop because of the volatility, and so on and so forth. Okay. So this is typically what happens in earnings season. Okay, so I wanted to explain that so everybody's on the same page, so we know exactly what our game plan is. Now, when we go and look at charts, because I promised you guys we're going to look at charts first, okay, and we're going to start. Let's start with M&E S&P, because we have already talked about the seasonality, and by the way, the seasonality in Nasdaq is quite the same. This is a chart of the M&E S&P, and a lot of traders misunderstood the correction that happened, not only from here to here, from high to low, from October all the way to the end of November, but also from the peak in January, end of January, to the bottom. And we're going to talk about this bottom here and how this formed and why this formed over here. And this was into the end of March. And then we had the rotation that took the price higher, and the price right now is trading into all-time highs. With all the mumbo jumbo geopolitical context, the market managed to make it into new highs. This is very specific for earnings season. And remember, we have started earnings season last week. I'm going to put very quickly the weekly chart right here. Okay, so basically this is the moment, this is the rotation 6653 that promoted the push to the upside. So it was this chart, this candle and this candle right here that propelled the market into the all-time high. Definitely a lot of traders were making the mistake that this is a downtrend, and it was not, right? Because as long as you have a super strong structure support to the left-hand side, then this could be a potential pull, like a rug pull, and then buy. This is what institutions are doing. I don't know how many of you guys have been around trading 20 years ago. So just give me a 1 in the chat box if you have been trading more than 20 years, because I'm going to share something with you in case you have, and I'm going to ask you if you remember. It was a little interview that Jim Cramer gave. And it was very interesting because he talked exactly about these peakable lows and the forced sell action. So when you're approaching a certain seasonality, or you're approaching some kind of a consensus in the market, in the sense of objective buying opportunities, right? You're always going to get a slingshot. This is called a slingshot. So a pull that drags the price below the support. And the reason why they're doing this is called an institutional forced sell. And this forced sell is dragging the price lower to stop everybody out, because they do not have the proper sizing to take the price higher. So they want to buy. These institutions are selling, force selling, and then they automatically rotate and flip, and they buy, and they go boop, and they buy. Okay, so the safe side to buy is this area right here that I've mentioned, the 6653 area, because that is basically a pattern onto the weekly that I showed you guys over here. Here it is. This is the extreme low, and this is the rotation, okay? So basically, this is what happens, okay? And Jim Cramer briefly, okay, I don't think it was his intention of mentioning this fact, but it's out there. So if you look it up somehow, he was very young at the time. I think it was like 20 years, maybe a little bit more. But he talks about this, okay, how, and he's like literally so honest, and he's saying, oh yeah, I used to do this, because the interview was back when he was working at a hedge fund, and he's talking about the practice that they would do with these futures indices, because he was on the futures side, and they would force sell and they would buy. Okay, so then they would reverse automatically. So what this creates is they're generating a lot of stops to get triggered. And of course, you stop, I stop, he stops, she stops, everybody stops, right? And the flurry is lower. And of course, it accelerates because the institutions are pushing it lower, right? So this is when nobody even dreams of buying, right? Like on the retail side, these are institutional footprints. Usually these institutional footprints come with a fingerprint, and the fingerprint is usually on high volume. And this is where it's at. This is a little bit, usually there's a little bit more volume here than this. Okay, so I wouldn't call this an exaggerated volume, because you can see here, if I hold my cursor, there has been time. This is the peak in the volume that is a little bit more substantial than this one that we had here into the rotation. But you can see the volume here, and you can see how they're buying over here. Take a look at the volume over here, growing compared to the prior day, exactly at the weekly rotation buy zone. Okay. So bottom line is that they are the ones that are doing these peakable lows. They're called periscope lows or periscope highs, for example, just to get everybody shaken out so they can buy more, not because they have something with us, not because they want to let's say stop us out. It's because they want to buy more, and this is the reality. Okay, so as long as we see a continuation higher, we as retail traders should not even be thinking about shorting. Okay, now there's a catch. Whenever we look, for example, at a chart like this, okay, we always take into consideration the size of the candles. And I'm going to zoom in right here. We want to see the size of the candles, because when the momentum is ending, the volume tends to decline, where here we cannot say that the volume is declining, because the volume has been quite the same within the last 5 to 6 days. But we're also looking at the size of the candles, right? And once the candles reflect a tighter range, meaning like an intraday tighter price, right, between the high of the day and the low of the day. For example, here, this is today's price action. You can see that we opened again because the market opened at 6 o'clock. So this right now becomes a very interesting area, because although it's into resistance, it broke above resistance, it's still into resistance, because that resistance doesn't stop at this very peak. The resistance is the area around it. And sometimes based on continuation and buying and so on and so forth, the price just slips higher. And then it goes like, oh, okay, wait a minute, I'm still into resistance. Okay, I better knock it off. I'm going to come back. Okay, so how do I gauge this area? So I look at the high of the day, and when I see that the price action is contracting a little bit, meaning smaller size candles, not as wide range bound as these ones, right? On the 13th, even the 14th, this really wide range, super wide range, medium, and a little bit tiny. I pay very close attention to these candles, and I have talked about this in last week's presentation that we had. And these are very important because once the price action triggers above the prior high, we will have another issue of a potential continuation higher. Okay, and then we're gonna go for the measured move and so on and so forth. But in this respect, we could safely say that as long as price is going to take out this high from today, so above 70, let's say 89, we're still gonna continue higher, okay? And then if the price action is gonna take out the 70,046, the price action is gonna start coming in, okay? Everybody on the same page? Okay, so here's what's gonna happen. If tomorrow the price gets weak and if the price action gets below 70.46, we're gonna have something like this. We're gonna get a red candle, then we're gonna get another red candle, right? And you can see here that we have a shelf of support, and that shelf of support is coming from, oops, wrong tool. The shelf of support is coming from a 10 exponential moving average right here, which is here at the moment. Now, what happens with this exponential moving average? This shows the predominant trend, right? So when we see like the dominant trend, you want to see it above the 10 EMA. 10 EMA is a really substantial moving average, is algorithmic rich. It has a lot of reaction. So typically the price action pulls back to this 10 exponential moving average. And if it doesn't like it over here, or if there's some, let's say geopolitical wise, it's not going to be all roses and, they're going to start bombing again. Yes, the price action can come back all the way to this support zone. Definitely. So it's a matter of time. However, the first shelf of support is still here. So as long as the first shelf of support is still holding, we may get a pullback if under 70,046, we get a pullback to the 10 EMA. And if the market proves strength, you're going to see another rotation. And this is what it's going to look like here. Okay. So you're going to see the price action move higher. Okay. So this is price action forecasting based on technical analysis. Okay. And like I don't think that I have explained anything that is like super scientific here. It's just very common sense price action dynamic. Okay. So this is exactly what we can expect from the market into the upcoming days. Now, another question that you need to ask yourself, especially when you have an all-time high, you go like, okay, so we have an all-time high. Now what? Okay. Where's the price going to go? So obviously you want to trace some extensions to see where the measure move is at, because institutions do not like to react or to trade without knowing what is the next potential target for the asset, right? So in this case, what we do is, let's go here. And we pick up a very prominent high, and we connect it to the low right here to find out some extensions to the upside. Okay, now keep in mind, this is the daily chart. And I typically create these extensions on a daily chart, and I don't go on the 1 hour or 5 minute or 15 minute. I don't do that. So I look at these levels right here. So I see 7,200 and I see 7,500, very close to 7,500, 74.69. I'm going to choose 7,500. It's a whole number. Same with the 7,200. Nice whole numbers. So basically this is not far from where we're at. So if I look at the prior price action within the last 4 days or 3 days, I could see that we can potentially achieve this in about 3 days. Okay, so that means that we can be potentially in this area in the next 3 days. So let's say Friday, Monday, or Tuesday, okay, or even Wednesday if the price action is going to be slow, or because sometimes you're going to get an inside day, right? So whenever the price action is violent and volatile, it needs some time to contract, to compress, and then it's actually letting go. All right. Okay, so with that being said, I just want to pull, I have a request here to pull NASDAQ up, which is pretty much the same story as with the S&P, and we actually have discussed this into the trading room, and we discuss it every single day in the trading room. So we had the core resistance area. This is October 2025 through January 2026, this resistance, and we have been gravitating into this resistance right here. And we have a substantial area of support that is coming actually from a pivot high from last August that a lot of people don't know how to read charts and the information that you're getting to the left-hand side. This is actually a super important element. It's not only support, but it's minor support. And if you understand minor support, you would understand that minor support is only present in massive trends and very strong uptrends, right? So minor support, you're not going to see a minor support area in a downtrend. It's only in uptrends. And as many traders were thinking that, oh my God, this is so bearish. We're in a bear market. Oh my gosh, they could not be any wrong. Because when you think about it, this is the low that we had like last April, and this is the high. We just had a very brief pullback, an incredible robust market and a hold, and we had a dynamic continuation right with the earnings calendar right here. Here it is. And you can see the April, right on track to deliver. And typically the month of April is a very strong, not only seasonal, but it's a very strong month for the stock market and also for the futures market as well. So now we're into resistance. Same analysis applies here. Look at the volume, look at the momentum, look at the size of the candles, where they're compressed. Look at the extension from the 10 EMA, extension from the prior resistance areas, and so on and so forth. So this is what basically we're seeing for tomorrow. We're going to be bullish above today's high, and we could potentially start a pullback if we break the low. Do we have chances to break the low? You bet. Because one of the biggest components, not the biggest, a big component has reported earnings today. All right, and this is Netflix. So Netflix reported earnings. Let me just take these out. Okay, we trailed out of swing trade and Netflix that generated some really nice profits for us. We actually had 2 trades, and yeah. All right. So Netflix is down. I will go through a bit into, I really didn't plan on doing that, but I'm going to go a little bit over the presentation that we had last week to show you the correlation between this market and stocks that are reporting, especially with Netflix. Today we had Netflix and we had Alcoa that reported, and Alcoa is lower. We also had some regional banks, totally not interested. Tomorrow we don't have a lot of earnings. We have Fifth Third Bank, we have Ally, and I think State Street. These are the companies basically that I will be watching. But because Netflix is down, okay, because Netflix is down, this is the daily chart. I'm going to put it here on, let's say, a 15-minute chart, okay? And you can see here that is down and it's sideways. So most likely that we may have not only a gap down, but a continuation lower in Netflix. Just wanted to see where the daily's at. Well, it's kind of like into support. So we have to wait for the open to see how institutions are positioning for this. But what we can do is definitely look at NASDAQ. Okay, so NASDAQ, we discussed on the daily that the price is still higher. But when we go on a smaller time frame, you could see that it really didn't have a lot of effect. Now, the stock market is closed and the effects of the earnings will come tomorrow morning. So if Netflix is not going to be able to find buyers tomorrow morning, meaning if institutions are not going to start buying, then it will pull back. And NASDAQ, there's a huge possibility that NASDAQ will pull back as well. So yesterday's low, meaning today's low, is going to be of high impact. Okay. All right, so now let's get on track here. All right, so when you want to trade for a living, so you guys see, you have to be able to look at a chart, analyze it. Basically, the chart is going to tell you exactly what you need to do. So reasons why you need to be trading for a living. First of all, no boss, no commute, no customers, no clients, no email, nothing. Okay. It's just you and your trading computer, and I could teach you how to do it. I have showed you right now how you need to look at the market and to look at seasonality and how to look at earning season, because nobody explains what happens in earning season, right? They come with these theoretical, intimidating concepts that, oh, companies report the EPS and this and that and the estimates and blah, blah, blah. Okay. But they don't really tell you in simple words what you need to pay attention to. Okay. So as traders, we need to be very educated. Why do you think education is very important? And we don't start by opening an account trading. And then if you're successful, you're going to start buying some education, right? It doesn't work like that. It's as if I will go right now, let's say, to the Boca Regional Hospital here. I'm going to just literally open the door to the surgery room, and I'm going to tell everybody, hey, you know what? I want to do this. I want to perform this heart surgery right now. And you know what? If I really like it, I'm going to go to medical school. It doesn't work like that. So you first need to know what you're doing in the market. Number two, you need to have the discipline and the patience. Why do I say that? Because I hear a lot of traders saying, oh, I don't have patience. I just got in. Well, you get in without patience when you have no freaking idea what you're doing. All right. So that is correlated with your level of education and discipline. And when you don't have the education, guess what you're doing? Oh, well, I'm jumping in because I don't have patience to wait. Oh, no, God forbid. Because you do not have the education. You have no idea what you need to look for in the market. Yesterday, we did a quick example in the trading room, and I explained why it's a really bad idea to buy off support. 95% of the traders out there, I don't know where you guys are situated, but 95% of the traders out there that blow up accounts, you know what they do? And because they're taught that, they're taught to buy low, sell high, buy low, sell high. So they're looking to buy all these buy low, sell high. But the reason why they're stopping out is because they're putting a stop, putting a stop, putting a stop. Because neither you or I have a hedge fund. We don't have unlimited access to unlimited capital. We don't have billions to get us out of trouble. I mean, I have enough money to get myself out of trouble. And when I'm swing trading, or obviously when I'm investing, I don't exit. I just add, for example. But there are some stocks where I take my money and run, okay, depending on the structure. But day trading is different because if you're gonna keep on buying off support, putting a stop, buying off support, and I heard some other mumbo jumbo crapiolas out there that people get in, they give it like 5-point stop or 10-point stop or whatever the index is. And S&P, they give like 5-point stop, which is like, ha, 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 I love your money, give it to me. All right. So basically what they're doing is suicidal. Okay. Those traders are never going to make it. Okay. Because they don't know how to handle the market. They don't know how to calculate risk. They don't know how to calculate an entry, how to calculate a stop, how to calculate a target. They don't know that everything on the chart is pure technical and that the technicality of the chart is going to help them. Okay. So how many of you guys would like to take control over your financial future for you and your family? Like I did. And I'm happy that my only regret is not starting sooner. Okay. That's my only regret. Okay. Generate income or supplement your income. Now with all these companies that are laying off people, laying off workers. I mean, there's a company almost every single day that you hear about in the news. So my goal for you tonight is to understand the process. And this is the reason why we started off with analyzing the chart. So you can see how simple it is once you have all the skills and everything that is entailed for you to analyze the chart. So for those of you that are new to futures trading, don't be intimidated by futures. They're a little bit on the wilder side, but don't be intimidated. You get more leverage. That means more buying power. So you can control large contract values with small amount of capital. You have very high liquidity. And if you trade the power hour, you really don't need to look a lot at the volume. You nearly have a 24-hour market access. So for example, right now, I could go on the chart. Let's say I have NASDAQ here. I'm going to go to a higher time frame because you don't day trade. You don't day trade a 5-minute chart or a 15-minute chart in the overnight. Let's say you would go to a 4-hour. Okay, let's just erase these. Okay. All right. All right. So you just take a look at the chart and say, oh, do I have a trade, or maybe I don't have a trade. So you start analyzing and you go like, okay, so look at the fanning out of the moving averages. This is showing us that the trend is massive, is intact. We're getting a congestion here because as you can see, the price action was really elevated in here and had a bubble of air all the way to the 10 EMA. Right now, you could see that the price action is very sideways over here. So for today's, and by the way, every single candle on this chart represents 4 hours of trading activity. If you don't want that, you could go on the 1 hour. I prefer a more compact look on the 4 hour versus the 1 hour. This is the 1 hour. I like the 4 hour only if I look at it overnight. So basically it's as simple as that. It's going to be bullish above the consolidation, and as long as the support is going to hold, we're not going to be thinking about a shorting. And if we are thinking about shorting, for example, if we get some pressure from Netflix earnings, if Netflix earnings is going to rub off on some of the other tech stocks, then we can assess what's going to happen. But other than that, what I do in powerful trends like this, I look for pullbacks. I don't participate in the downward move, because the downward move that is going to happen is not going to be measured. It's going to be a brief interaction within a massive trend. And I don't do that. What I do is I like to trade with the velocity to the upside. I don't want to get like few points here and then, oh my God, I'm going to put myself at break even because you're freaking out because this is the massive trend, right? Okay, so nearly a 24-hour market, and you can take advantage of that. Not only that, but you could, for example, you can trade oil, right? So here is oil, right? Every single divergence, every single chop in oil, you can take advantage of if that's for you. Gold, for example, I don't know how many of you guys know, but this is the seasonality for natural gas. Okay, so I don't know if you've noticed, but there has been a rotation today. So I'm going to zoom in here so you can see what kind of price action we're getting here. So we had the downward move and we had an inside candle. An inside candle shows us compression. And again, if you know how to read these candles, boom, you are set for life. And then again here, it rotated. So you can see that it took out the prior high. The first target is going to be this 10 EMA at $2.70. And then it's going to fly high to about 78. So just wanted to show you that within the 24-hour market, and it doesn't take long to scan, because when you are trading futures, there are just a few things that you're looking at that I'm going to show you in a second. low trading costs. So you're not going to have a lot of commissions for that. Tax efficiency, talk to your CPA about it. Because like I said, you have a lot of tax advantages. You have transparency and regulation. You have diversification opportunities. You can trade indices, currencies, commodities. I'm going to show you in a second. Professional level tools for everybody. So this is super cool because we have access right now to institutional grade platforms. Remember, they're not institutional platforms, because if you guys would ever have the opportunity to trade off of an institutional platform, it's literally, the price action is so fast, it's nauseating. So these are institutional grade platforms, although you have to be very careful because during market volatility, they don't keep up because they are retail platforms. Even though they're institutional grade, they're retail platforms. All right, so basically when I'm referring to the market, these are your employees. This is what you have to scan for. And I don't scan through all of the panel here. These are my day trading employees, the Dow, the S&P, NASDAQ, and Russell. I look at the VIX, right? I have to watch the fear factor, even though right now you really don't need to look at the fear factor, because there's one fear factor that is closer to the market, and that's oil. If oil is down, the market is up. Market is up, oil is down. It's a teeter-totter effect. It's acting exactly like the VIX. VIX or oil, pretty much same thing. Tomato, tomato. All right. So obviously this is the one. Okay. This is the one, the crude oil that everybody looks at and everybody trades. Gasoline RBOB as well. You can watch it because there is not really a strict correlation between the two. They usually move in sync, but not that in sync. They're not that in sync. Natural gas that I talked about right now. So you can read more about natural gas on your own, about seasonality, and just, I hope I have opened the door. I've made you curious about the seasonality. I made you curious about analyzing a chart. Absolutely love it. And then the other thing that I watch is gold, silver. I don't trade platinum, palladium. Copper is very interesting, and I look at. And then grains, not really interested, not my thing. Okay. So my trading universe is basically very simple. It's the indices, metals, and in metals, I mean copper, gold, and silver, energy, natural gas, and oil, and bonds. Do you guys think this is a lot? Type of 1 if you think like, oh my gosh, I can't handle this. Or if you think that 6,000 stocks in the stock market is easier, type of 2. Okay. All right. So earnings season has a very powerful impact on the market. Because into the futures market. These futures track the broader equity indices and react strongly to the earnings results of the major indices components. Earnings season is the time when the market actually reveals its hand. It is where momentum starts, trends shift, and new leaders emerge. So earnings season, I don't know, this picture just covered the title here, but earnings season has already started. You're going to get more market moves, and they're on the fundamental side. You're going to get velocity moves. That means that you're going to have more continuation. Look at last week and this week, right? For those of you that were last week, I mean, I told you guys which direction you need to be. Follow through is a real thing. You can see that we're getting projections and we're getting targets hit. The return of volatility, and this is the good of volatility because this is the volatility that is driven by fundamentals and not by news. And you're getting bigger price swings. You're going to see bigger ranges within days. And for the really smart trader, that means more money. So I don't know about you guys, but I like to push the pedal to the metal in the first 6 weeks. And then, of course, I'm going to be in the market. I'm going to watch the power hour, but I'm going to be like, okay, I'm going to protect what I've made within the first 6 weeks. And then I am going to change my trading plan just a little bit, just a tad. So that means less time spent in the market, and then you're taking advantage of the institutional power moves that occur in the first hour of the New York trading session, right? Okay, so a lot of time, not a lot of times, but futures react to overnight, right? So we're still getting overnight data. Okay, so track that data as well, because that's very important. And especially watch when big tech companies report, like Microsoft, Apple, Amazon, or like we had, because we had JP Morgan, we had Goldman Sachs and Bank of America that have already reported. We have Bank of America, guys, that reported yesterday. Excuse me. So reported yesterday. Now here's this. A positive earnings surprise means that the futures are going to move up, and a miss or a weak guidance, that means that the futures are going to move down. Now, Netflix has reported earnings. I haven't checked the guidance on it, but I could see that it's down, so something happened. So it could be weak guidance and it could be weak earnings as well. So check that out, and I'm going to obviously check it out tomorrow before the market opens. I don't have to do it tonight. And there's actually less work when you're trading futures versus stocks. And weigh the components that matter, right? So NASDAQ, pay attention to the Max 7 stocks, the S&P, like broad-based impact by tech, financials, and healthcare as well. And the Dow is typically moved by blue chip companies like JP Morgan, Bank of America. And by the way, Bank of America, Boeing has been weak today. Okay, so it's a little bit down. Home Depot, McDonald's, etc. So earnings beat versus for guidance. Now I know I'm getting you a little bit into the stock market right now, but guess what? You need to know this because the actual EPS beat is less important than the forward guidance. Write it down. So the markets are forward looking. So if earnings beat but outlook is weak, then the futures can sell off, because obviously the stock that is reporting that has that tag to it will also be weak or bullish, depending on how it is. All right, so what do we need to focus on, team? We need to focus on earnings, right? And we need to also look at the reaction in the market, how the stock market is reacting and how that is creating a reaction into the futures market. Now, I'm telling you, tomorrow's Friday, not a big deal. We have Fifth Third Bank and Ally that is going to report, and then State Street that are on my list. But next week, look at these earnings. I mean, I don't know you guys, but I'm seeing a Tesla here, right? So there are some Intel over here. By the way, Intel, hope you guys got some Intel if you're swing traders, because it was phenomenal. So we have a lot. You have American Express, you have Boeing, you have a lot of companies. These are Dow companies right here. So more likely that the Dow is going to get impacted by the price action reaction next week. Now, when we discuss that circle, that earnings circle, and when I explained to you guys that first 6 weeks and last 6 weeks, yada, 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 I just wanted to mention this. This is what I'm referring to, the first 6 weeks. You gotta focus being the zombie present in the market in the first 6 weeks, and especially in the first 4 weeks. Do you guys know where we're at right now? We're here, okay? So we're gonna be here in 3 weeks, okay? In 3 weeks, we're gonna be here. This is gonna be the biggest, massive day for the stock market, for the reports. This is where you wanna be, because this is the good volatility. This is the good volatility that is coming in the market, that's going to come into the market, and this is going to be hot. You need to be here in the market, especially week 2, 3, and 4, and then it's downhill. Do you guys see week 6, week 7, week 8? Okay, no high impact releases. Okay, nothing. Okay, just baloney. So how do you trade it? Avoid trading before the big announcement, right? So if you're focused, I rarely trade, rarely trade before the market opens. I wait for the market to open. I have my own strategy, my whole mojo, so I just wait, because I want the market to show its hand. I'm not just getting in. I know more than that, okay? So I don't get in because you're going to have the interaction. So the futures market has time to react a little bit off the earnings before the market opens, right? But when the stock market opens, it has a different vibe. So what went down in the pre-market can shift in a nanosecond into the New York trading session, because what I'm interested in is I'm interested to trade the most powerful, potent market in the world, which is the New York trading session. It has nothing to the London session, and the London session has nothing to rather to the New York session, and the Asian session is just flaky. Okay, use the overnight session, gauge the volatility, look at the ranges, look at some setups. Typically, you're going to see a lot of range bound action, just like we're seeing right now. And trade the indices with the most exposure, right? The NASDAQ or the S&P or the Dow, etc. Map out your technical zones. Make sure that you recognize the pattern, recognize the trend, recognize where the support is, recognize where different resistance areas and support areas are, not only one. Make sure that if you're trading at all-time high, you have a game plan as to where the next target is going to be in the market, because everything is a measure and move. Don't think that institutions are just going to get in and they're going to say, oh, we're going to take this price. I don't know where the target is because it's trading at all-time high, but I know it's going to go higher, okay? Or I'm going to be a contrarian and start shorting. Okay, so use time frame correlation, use the 1 minute all the way to 15 minute and shift between those. But before you get to these time frames, do your due diligence with the higher time frames, right? Because you need to get all your information from the quarterly chart, from the monthly chart, from all these other time frames before you get into the 15 minute. Just because you're a day trader doesn't mean that you're not going to be watching and trading what the higher time frame, what the higher time frames are telling you. Because the directional move in the morning comes from higher time frame, does not come from a 5 minute. You're wrong if you think that the market is reacting. Oh my God, I'm just jumping in on the 2 minute or on the tick chart. I'm a genius. I'm trading the tick chart. No, you're not. You need to have a diligent approach to trading and do the top-down analysis before the market opens. Plot out your areas of interest, set some alerts, and all I could do is sit and enjoy the ride. That's what I do every single day. You're not gonna see me like all emotion with tons of emotion, like, oh my God, the market is open. Oh my God. No, it's calm, collected. It's like, okay, if it goes here, I'm going to be interested. I'm going to look for a setup. And by the way, no setup, no trade. Why? Because I have the patience. Why? Because I'm highly educated. Okay. So pro tips, watch the first 15-minute range. Very important, into the 9:45. Okay. Because a lot of times when the market is compressed from the overnight, it tends to hold that compression for the first 15 minutes and then it explodes or implodes. Okay. Use tools to identify earnings like Earnings Whisper, Earnings Hub, NASDAQ, FinVest, what have you, Yahoo, whatever it is. You can use whatever you want to get. Your platform is providing you, if you're trading off Thinkorswim, your platform is providing you an earnings calendar and an economic calendar and news and whatever. Also, watch the volatility monitor, which is the VIX, crude oil for now. Okay, so here are some reports and the impact. Okay, this is Wells Fargo that reported earnings here. The stock is down, and you could see the reaction of the mini S&P down, right? So in sync. Don't be married to that reaction, because ultimately, for example, Wells Fargo is just a small piece into the mini S&P, and if you have strength, you're going to trade the momentum lower, and then you're going to rotate for higher, depending on the trend. Again, trade with the trend. Netflix earnings lower, NASDAQ reaction lower. Here's another example, Netflix lower, NASDAQ lower. That's why I'm telling you guys, watch the reaction tomorrow morning when the New York trading session opens and plot it out. See where you would place your stop, where you would enter, where you would have your target, where the support is, confluence support. That's also great. IBM higher, and here is the Dow higher, pullback. Notice the pullback here in IBM, pullback and down, then higher. All right, then this is how you sync the indices into the stock market into your indices. Dow is basically formed by 30 stocks. Within the S&P, you have 500. Within NASDAQ, you have 100. Within Russell, you have 2,000. Okay. All right. So this is how you sync. Okay. So you can sync your Dow stocks, for example, into the M&E Dow. And notice that a lot of times you're going to get a lot of stocks that are higher within the Dow. And if a lot of stocks are higher within the Dow, then definitely Dow is going to be higher. All right. So check the earnings, trace your levels. And for example, if you have NASDAQ stocks that are reporting, trade NASDAQ because it's super simple. Okay. Or if you have energy stocks that are reporting, watch the S&P. It's common sense. It doesn't have to be like super complicated. Okay. So best time to execute the trades. It's basically what best time, not really to execute the trades, but when the companies report, they report before the market open. Okay. So trade the open. Okay. So after the market closes, for example, Netflix reported earnings after the market closes. So watch the company after the report. Plot your NASDAQ levels, for example. And how to prep. You need to know when these stocks are reporting. You don't know, then you're going to be in the like unknown. Okay. So you're going to trade whatever, is on the fly that day. And you don't want to do that because you're smarter than that. And now you are educated because you have been to this presentation, this workshop, and now you know what the heck you're doing. For example, Netflix up, you can see here NASDAQ sideways and very, very high in the New York trading session. Here we have another example of NASDAQ down and Netflix down, NASDAQ down. So these are a lot of examples in here from different earning seasons. Here's a day where you had Google, Amazon, Microsoft report all up, definitely NASDAQ up and away. Correlation. This is the same day, for example, then this is showing you divergence. So pay very close attention to that because this is what kicks the butt. So for example, here you have a Walmart report and the Dow is higher, Walmart higher. On the same day, Apple reported and it was down and NASDAQ down. So be very, very, very attentive because divergent markets are hard to trade. So what you need to look for: trend, support, resistance, multiple time frames, correlate them. They have to be in sync. Plot the entry, the stop, the target, and the risk for the trade, which is super important. Try to determine the entry based on the time frame that is providing you with the most information. A lot of times traders are asking, okay, what's your favorite time frame? Well, that's a silly question because I don't have a specific time frame that I like. It's the time frame that shows us the clear entry stop target. That's it, and has the better risk. Place your stops, wait for the trigger, and have a trailing method. I mean, guys, it's not like, okay, I'm going to get in and now what? Have a trailing method. Because a lot of times, traders get into a trade and they go like, oh my God, what do I do now? Okay, does that sound familiar? Oh my God, what do I do now? I mean, they have no idea how to trail. They go like, oh my God, I'm going to take my money into resistance, right? Which I don't know, may be okay. I don't know. You tell me if it's okay, but I'm not doing that. Okay. So I'm applying 3 trailing techniques to my system. Okay. And I'm going to apply one of them that makes sense to that specific pattern. So not all techniques not all techniques are applicable on that specific chart pattern. So I'm going to make it very quick. I have a class that is coming up. It starts on Monday, May 4th. This may not be for everybody. This is for traders that are interested in propelling their knowledge, for traders that want to fast track, for traders that want to become professional traders, for traders that don't want to mess around in the market. They want to make serious money. It's still early in the year. It is April. This is the 90-day Power Income Futures Masterclass. It starts on Monday, and that is on May 4th. It's a 3-week for 3 weeks. You will receive 5 on-demand lessons, Monday through Friday. You're going to have access to 1 implementation session with me. It's going to be a couple of hours where we're going to incorporate everything that you have learned within these 15 classes. And these classes are for about an hour and a half long. Sometimes a little bit longer, depending on what we teach within that specific chapter. Then we're going to put everything together. This is the most important part, this live mentoring and implementation. We take everything that we have learned within 15 days and we put it all together in a couple hours. Actually, we put it together probably in about 30 minutes. And everybody, when everybody gets into this live implementation, they go like, what? Is it that freaking simple? And I'm here to tell you, yes, it is. Yes, it is. Okay, so you're also going to have trading room access for 3 months. So basically, you're going to be trading with me. You're going to be under my wing for 3 months. That is 90 days. This is a professional trading program. It's voted best in the industry by Benzinga. I'm pretty sure you guys have heard of Benzinga. They gave us a beautiful award. So if you're ready to dive in now, I'm going to give you the link in a second. But I'm going to tell you something. If you sign up now, you're automatically going to jump into the trading room. Okay. So you're going to have the biggest advantage that before the class starts on May 4th, you have already learned how to trade the earning season. So this is a big plus. This is like, imagine having someone that is going to show you every single day what you need to do in the market in earning season. Okay. So you're going to get a lifetime access to the Power Income Futures class. Nobody's going to take away your classes, your on-demand recordings. You're going to get an e-manual. It's over 600 pages of education, strategies, trading plans, and more. You're going to get live coaching sessions. And by the way, you're going to get these implementation sessions. What if I told you that you're going to get monthly implementation sessions? This is wild. The value is, and by the way, this is the last time that the course is going to be available at this price. The price is going to double. You're also going to get, like I said, 3 months access to the futures trading room where I'm going to hold you. Hey, I'm going to be calling all the shots. I'm going to tell you where to get in, where to place to stop, where the targets are, and I'm going to be trailing it for you. I don't know about this industry, and I don't know whoever does this in this industry, but there's nobody that does this. I haven't heard of anybody doing this. So guess what? If you lose in a trade, you go like, oh, it's your fault. I accept that. I accept that. So you're going to get access to a private X feed that takes you outside of the trading room hours in case we have a trade where that has not trailed out within the first hour or the couple of hours, right? We're going to take it out on the private X feed because we're not chained to the computer. You're going to get platform layout, so you know how to have your platform laid out. Guys, this is so important to know how to arrange your charts on the screen, because when you're day trading, it's not going to be one screen. You're not going to start toggling. You need to have at least 3 screens. 3 screens is enough to start with. Okay. It's not one of those things where you're going to see me on a cell phone on the beach or on the golf course say, oh, I took a trade. It's so fantastic. I love my life. Get ready with me for a life as a day trader. I'm going golfing right now. I'm going on the boat right now. I'm going to the beach right now. And all I have to do is have my phone. No, I'm not telling you crazy dreams, guys. I'm telling you reality. And the way you look at charts is going to clarify if you're going to take the trade or not take the trade. And you're going to look at the charts and you're going to say, oh, okay, here's the target, here's the entry, here's the stop, boom, in a nanosecond. Do you want that? Wouldn't that be cool to look at charts and say, oh my gosh, I recognized everything, instead of toggling and struggling and moving charts around in your screen like, like a madman, okay? You're also going to get student personal support for the first 3 months. It is free. Email me if you have any questions whatsoever, okay? And you're also going to get an enhanced risk portfolio, risk and position size with auto R calculator. So you're in control of your money and consistency. How cool is that? Okay. Total value of the course is over $36,000. And this is the only place where you can learn how to trade. And by the way, 95% of the traders in the room understood the mission. And they are students because they understand. It's one thing when you join the trading room as a graduate of the class, and another thing when you jump into the trading room because you're so desperate to make money and you're so desperate to learn something and you're never going to figure it out. Okay. And by the way, the trading room, we trade. I know I give some lectures today. Again, I had like a huge lecture in the trading room, but the trading room is where we make money. My purpose for the trading room is to make money, first for myself, okay? And I share my trades because I just mentioned the trades that I'm getting in and the trades that I'm not getting in, okay? So like I said, this is the last time when the course is going to be $59.99, which is a freaking bargain for everything, all the garbage that is out there. And there are companies out there that charge 3 times more and they offer you 5,900 times less. And you could also get it in installments. You could scan this QR code right now, right here. Choose your installment plan and get started. And then you could also, let me just get the link here for you guys. Okay, here's the link. Okay, just click the link and let's get started. You're going to unlock your path to profitability in 90 days. You're going to take advantage and you're going to learn so much. You're going to learn how to trade earnings season. You're going to learn how to trade outside of earnings season. And imagine that you're going to get the course, plus you're going to trade live with me. Okay. Also, here by the way, here are some details about the installments available. And here is the class start date. This is May 4th. It's going to be on Monday. You're going to get 15 on-demand classes, 1 every single day, Monday through Friday. And the classes are going to drop in your email at 12 p.m. Eastern. Okay. All right. So this is the class. Also, in addition to day trading, we're also offering you guys an on-demand course for futures swing trading. And it's designed to help you unchain even more from the computer and actually, guess what? Start swing trading. If you're a busy entrepreneur, if you do not have time to spend day trading into the market, you don't have to trade every day. You can put a trade on once a month, once in 2 months, and depending on your risk tolerance and depending also on the market environment, you could actually do it more often. Because if you have a setup, you have a trade. You don't have a setup, you don't have a trade. The market is going to tell you whether you're going to take a trade or not. Oh, thanks so much, Oscar. Hi, Oscar. Okay. I only have Floridians here tonight. Okay. So if you want to join this course, by the way, if you go to our website, TradeOutLoud.com, okay, you're going to see that this course is $4,997. But when you buy the power income futures class, you can add this course for $19.97. Okay, so you can add it for $19.97. When you graduate from the first course, from the basically from the 3 months, We are also going to share with you this. No, I'm sorry. So after you graduate, so this would be at the end of May. Okay, so after a month, you're also going to receive this course, and it's also going to be on demand. Okay. So these are some of the things that we're going to teach you. You can read through this. I'm not going to waste your time right now. So basically, we are going to teach you everything there is to know about candlesticks, everything about market cycles. When is the best time to buy? When is the best time to short? When is the best time to sit on your hands? SOH. We're going to talk about market trends. I mean, market trends, I'm pretty sure everybody's familiar, but we're putting a different spin on trends that when you guys join, you guys are going to see that we have elements that we use in the chart, and we don't use like special indicators, or you're never going to hear me, oh, buy this indicator. No. But what we teach here is how to identify an early market change in the trend. Okay. I think this is one of the most important things for the market, especially that a lot of traders, for example, here, when we look at NASDAQ, okay, when we look at NASDAQ daily, okay, NASDAQ daily here, okay, my drawings are not here anymore, but a lot of people here were shorting, okay? So we teach you how to take advantage of this, okay? Take advantage of this so you can make money. How precious is that? How powerful is that? So learn how to identify, oh, it's not but it's an early market change in the trend, okay? Trend change. We're also going to talk about time frames because they're not all created equal. We talk about the anatomy of the trade. So you know when you get in a trade, you freaking know the exact area. So for example, if I want to get in NASDAQ, I know for a matter of fact that if I have a setup, it's going to be at, let's say, 24,030.25. So I know exactly where I'm getting in, okay? We're going to talk about the market tempo. We're going to talk about trigger times. These are proprietary to TradeOutLoud. This comes from my over 35 years of market experience. You can't put a price on that. 10 trading strategies. I mean, you see the strategy, you take the trade. You don't see the strategy, sit on your hands. It's that easy. We're also going to teach you technical analysis. You don't need another book. You don't need another seminar, another webinar, another class, anything. Boom, this is it. Money management. Oh, this is one of the most important chapters of the book. If you understand this chapter, you're going to make it. You skip this chapter, you're not going to make it. That's why my students really go through this chapter at least twice a month for the next 5 to 6 years. Twice a month, at least. Okay. All right. That's not that. Yeah, rolling R's, and that's not everything. It's way more than that. And here we teach exactly traders how to double, triple, and quadruple the account, because we're not just trading just for the sake of trading. We at the end of the year, we at least want to see 4 times the account in December. So we're not just, for a little setup and this and that, and we're happy because we made some money. Also, we have a huge chapter on trading psychology. You also have a trading journal right here. My personal trading plan. Also, an action plan that is going to walk you through literally minute by minute, from before the market opens till the market closes. It's going to hold your hand, what you need to do, what you need to look at, what you need to, how you need to react. Okay. For example, 10 o'clock reversal time. Look at the 5-minute chart. Look at the price that needs to be above this and that, or around this and that. Look at this support. Look at that resistance. I mean, in detail, this right here is worth 10,000, and I'm not kidding you. Okay. The parallel levels, this is what we're going to do together into the implementation day. And these 2 chapters we're going to do together. We have way more many chapters than this that you're going to find out when you join. This is just to give you, to pique your interest into it. So everybody in here in these reviews, everybody is a student, and you're going to see them in the training room. You see Oscar right here. Oscar. I don't know, Oscar, did you leave us a review? Now that you're here. Okay. So if you guys are ready, the class starts on May 4th, on Monday, May 4th. So if you want to join, remember, you have the huge opportunity to trade earnings season with us. So let me know if you have any questions. I'm open for questions right now. Open for questions. Here's the link again. All right. Let me know if you guys have any questions. It's going to be an interesting day tomorrow. Yes, and we're going to have it available very soon for everybody. All right. Okay, team, this is it for tonight. Hope you guys are going to have a fantastic day, rest of the day or evening. And I hope you guys are going to have a phenomenal earnings season. I will see you guys in class on May 4th and in the trading room tomorrow. Thanks so much, everybody. Have a great night.